Alright, dear students, in this video we are going to do a question from the statement of the cash flows, and this is the question number 368 from the Kaplan kit. You may have a different number in your kit because of the addition. So remember the name of the question. The name of the question is Kingdom. So this is the Kingdom question of the statement of the cash flows. Let's go to the requirement first, and if you see the requirement, so you have the 15 marks requirement for the statement of the cash flows. Prepare the statement of the cash flows for the kingdom for the year ended 30th September 20x3 in accordance with IAS 7 using the indirect method, because in the question, in the paper, you will be having a question from the indirect method. So let's read the question. Kingdom is a publicly listed manufacturing company, and its draft summarized financial statements for the year ended 30th September 2003 and the comparatives, which is the previous year income statement, is given below. Statement of profit or loss or other comprehensive income, and you have 2 years, so you have 20x3 and 20x2. And let's read the components of the statement of profit or loss. You have the revenue, cost of sales, gross profit, distribution cost, administrative expenses, investment property. One is the rental received, other is the fair value changes, finance cost, profit before tax, income tax, profit for the year, other comprehensive income, and total comprehensive income. Then on the next page you have the statement of financial position, again for 2 years. You have the property, plant, equipment. Remember this thing, that in the exam you have to make sure when you are making the statement of cash flows that you are reading the exact years. So on the right hand side it is 20x2, on the left hand side it is 20x3. So plant and equipment, it is increasing from 25,200 to 26,700, and then you have the investment property, it is decreasing from 5,000 to 4,100, and then there is the inventory, which is 3,100 to 2,300, then trade receivables 3,400 to 3,000, and then you have the bank, which was 300, and in this year, the recent year, it is nil. Okay, then you have the equity shares, which are increasing from 15,000 to 17,200. Revaluation surplus 2,500 to 1,200 is decreasing. Retained earning, it is also decreasing. 12% loan notes, it is static. That means they have not taken any loan, neither they have any made payment. Trade payables increasing. Accrued finance cost, bank, and current tax payable. Then you have some notes. On 1st July 20x3, Kingdom acquired a new investment property at a cost of 1.4 million. Okay, so that means this is an outflow because we are making the statement of cash flows. On this date, it also transferred one of its investment property to the PPE. So this is a transfer, and the fair value was 1.6 million as it became owner occupied on that date. Kingdom adopts the fair value for its investment properties. Kingdom also has a policy of revaluing its other properties, including the PPE, to the market value at each year end. Other comprehensive income and the revaluation surplus both relates to these properties. So if you go to the other comprehensive income, you will see this is a revaluation loss of 1,300. Then depreciation of the PPE during the year was 1.5 million. An item of the plant with a carrying value of 2.3 million was sold for 1.8 million. That means this is a loss on disposal. So loss on disposal of $500. All right, so now we'll be making the statement of the cash flows, and I have already made a spreadsheet for that in order to save the time, and in the exam you have to make it yourself. So on the left hand side I have the statement, on the right hand side I have the T account workings. So first of all, we'll be starting from profit before tax, and profit before tax we have to take that from the statement of profit or loss. So from the statement of profit or loss, all right. So profit before tax of 20x3, the recent year, profit before tax is 2400. So we take this 2400 and we put it over here. So 2400. All right, then you have the investment income. Let's go back and see whether we have any investment income, interest income in the statement of profit or loss. No, we do not have any such thing. All right, then again, do we have the interest expense, which is the finance cost? Yes, we have the finance cost, which is 600. So what we're gonna do, we add back the finance cost because it is deducted while making the statement of profit or loss. Now you do remember the concept from my cash flow video that the interest expense is based on the accrual concept, that the financial statement, specifically the statement of profit or loss, it is made according to the accrual concept. That means income and expense should be recorded in the period to which they relate. They are not following the cash basis, but we are making the statement of cash flows. So the concept of the statement of cash flows means that we are taking the profit before tax. We will add back all the expenses which are included within the statement of profit or loss based on the accrual concept. We will deduct all the incomes which has been included within the statement of profit or loss based on the accruals concept, and we will add and deduct the actual cash for it because we are making the cash flows. All right. Then you have the depreciation and amortization. Yes, we do remember that there was a depreciation and the depreciation is 1500. So let's go back and we have the depreciation which is 1500. Again, depreciation has been deducted while making the statement of profit or loss. So we have to add it back because depreciation is a non-cash expense. Okay, do we have the profit or loss on disposal? Yes, we were having a loss on disposal of $500. Now this $500 has been deducted while making the statement of profit or loss. But again, this is not the proceeds. This is not the actual cash. This is the difference of the carrying value and the proceeds. So we're gonna add it back. So 500 is the loss on the disposal. Okay, loss or profit on the investment property. Yeah, there were the fair value changes. Let's go back to the statement of profit or loss, and yeah, we have the uh, changes in the fair values, which is eventually a loss because the investment property fair value model, it it actually specify that when there's a gain or loss, it should be recorded in the profit or loss. So again, this is not a cash which has been paid. This is simply a difference between the previous fair value and the new fair value. So there's a loss. They have deducted it while making the profit or loss. So we're gonna add it back, 700. Then you have the rentals from the investment properties. Again, we will take the rentals in the investing activities, but that rental should be the cash which has been received. Now this rental, we are supposing, because this is over here, so we are supposing that this is actually based on the accrual concept. But in this question, this is the same as the cash received as well. So we're gonna deduct it from here because they have added it. So we're gonna deduct it from here, and we will add to the investing activity. So in the investing activities, we have the rentals from the investment properties, which we will add 350 over here. All right. So then you have the amortization of the government grant. Because I have taken the full format over here. In the exam, obviously, you are supposed to draw the specific things which are in the question. But for the convenience, I have taken the whole cash flow format from my cash flow notes directly into the spreadsheet. All right. The amortization of the grant, we do not have that. And then increase or decrease in the inventory. So if the inventory is decreasing, that means we have sold the inventory. So this is the inflow. If inventory is increasing, that means you have further purchased the inventory, so this is an outflow. Similarly, with the receivables, if receivables is decreasing, that means you have recovered it, so it is an inflow. If receivables is increasing, that means it represents an outflow. And opposite is the case with the payables and the provisions. So let's go to the balance sheet and see. So in the balance sheet, we have uh, the inventory. It is from 3100 to 2300, so it is decreasing, so it is an inflow. So 3100 minus 2300, so 3100 minus 2300. Okay, then you have the receivables. Again, receivables decreasing, so it represents an inflow, 3400 to 3000. So 3400 minus 3000. Then let's go to the payables. What is the story with the payables? Okay, payables are increasing again, 3900 to 4200. So that means the supplier has given us more money because we previously owe 3900 and now we owe 4200. So basically this represents an inflow. So 4200 minus 3900. We do not have the provision in this question. Okay, now interest paid and the tax paid. So you have to calculate it from the workings. But in this spreadsheet, I have not named the workings like 1, 2, 3. But in the exam, you will name it, like for example, interest paid. So you will write working and the reference. Similarly, the tax paid. So you'll write, okay, this is coming from the working. So first of all, we have the interest paid. For that, we gonna use the interest payable account right in front of you on the right hand side. Let's go to the balance sheet and see whether we have any opening and closing balance related to the finance cost. Yes, we do have. If you see over here, the opening balance is 50. The closing balance is 100. Then we're going to take the finance cost, which has been included on the accrual basis in the income statement, and it was 600. So 600 is the profit or loss figure. So 550 is actually the interest paid, which is calculated as a balancing figure. And because I've linked this T account directly into the cash flow, so it shows minus 550 over here. Then we're going to go to the tax working. In this question, we only have the current tax, current liability in the statement of financial position. But in some other question, you may have both the current tax and the deferred tax. So you will take the sum of both, one from the current liability and one from the non-current liability. So let's go to the balance sheet again and see. We have the tax payable and the figures are 1850 and 500. Be careful with the figures in the exam question. So the opening balance is 1850 and the closing balance is 500. All right, then we have to take the tax expense from the statement of profit or loss, and this is 600. So 600 over here. All right, it gives you the balancing figure. It gives you the balancing figure of 1950, which should be deducted from here, and I have linked it so it shows directly 1950 outflow. All right, so we are done with the net cash from the operating activities. It shows 4350. Then the purchase of property, plant and equipment. Again, this figure will be calculated from the working. So as you know, I have described this thing in quite detail in my cash flow video. So purchase of the property, plant and equipment, we have to go to the T account. All right, so this is the T account, And let's go to the balance sheet. What is the opening balance of the PPE? Opening balance is 25,200. What is the closing balance? It is 26,700. All right. Depreciation, they told us it was 1,500 in the last paragraph. Yeah, 1,500. Disposal, the plant with the carrying value of 23 million has been disposed, so 23 over here. And then they said that they did the revaluation, and the other comprehensive income of 1,300 represents the revaluation loss. So revaluation loss, this will come here, revaluation loss. And how much is the amount? Amount is 1,300. And then they said that a property has been transferred from investment property to PPE and the worth is 1.6 billion. So there's a transfer from investment property to PPE. So because it is coming in the PPE, so record it on the debit side, which is 1,600. Now in this question, we have the opening balance, closing balance. We have the revaluation, but that is a revaluation loss. That is why we have taken that on the credit side. The right of use, we do not have any lease thing over here. In some other question you may have. So this 5,000 is the purchase of PPE. I have linked it directly. So you can see this represents the outflow. And similarly, in this question, we do not have acquisition of intangible asset, but they told us that there is acquisition of investment property. And the investment property was bought at 1.4 million. So minus 1,400. All right. Then development expenditure, no, we do not have in this question. Receipt of government grant, no. Proceeds from the sale of property, plant, and equipment, yeah, we do have that. We do have that, which is 1,800. They sold the plant for 1,800. So we're gonna add the proceed over here. Interest received, dividend received, no data. And then we have the proceeds from the issue of shares. Yeah, if you see the shares, so they have increased from 15,000 to 17,200. So we're gonna go to the share premium and share capital account. In this question, you have only the capital. In other question, you may have the premium as well. So 15,000 is the opening balance, and the closing balance is 17,200. That means 2,200 has been received from the issue of shares. Now this 2,200 will be added over here. Proceed from the issue of long-term borrowings. So we can see that the non-current liabilities remain unchanged. No borrowings, no repayments. Then you have the lease liabilities. We do not have anything in this question. All right. Then you have the dividend paid. Yeah, we have to calculate it from the retained earning account. So we'll go to the retained earning, and let's see the opening balance of the retained earning is 8,700. Closing balance is 7,700. So 8,700 and 7,700. All right, what is the profit for the year? So profit for the year is 1,800. That means dividend paid is 2,800, which is directly deducted because I've linked the financial statements. Now we calculated the net cash from operating activities, which is this. We calculated the net cash from investing activities, which is this. We calculated the net cash from financing activities, which is this. Now we have to take the net increase in cash and cash equivalents, which is the sum of these three activities, which gives you minus 500. The next step, as you remember from my cash flow video, is you have to go to the balance sheet and you see the cash and cash equivalents at the beginning of the period. So you go to the balance sheet and you see that the bank balance was 300. This is the current asset minus overdraft. So overdraft is nil. So that means 300 minus 0. We'll put the 300 over here. It gives you minus 200. This minus 200 should be equal to the closing balance of cash and cash equivalents. If it is equal, that means you have made the correct cash flows. Otherwise, there is a difference somewhere. So now we go to the balance sheet again and we see how much is the bank balance. It is nil. So 0 minus the current liability, which is the bank overdraft, which is 200. That means your closing balance should be minus 200. Is this the case? Yeah, this is the case. That means you have correctly made your statement of cash flows. So make sure in the exam you are dealing with the correct figures. Make sure you are linking your balances with the statement so that examiner can easily understand where this balance is coming from, and make sure that you are naming the workings as well, working 1, working 2, and giving the appropriate reference.